Hello everybody, how is it going today? It's about 4:30 in the morning on Wednesday, February 28th here, and I wanted to take a look at Ethereum because big opportunities coming up soon, guys. When I say big opportunity, I'm talking about in 24 hours, and it's my obligation to you guys because not obligation, but more so my commitment to you guys to make sure that these opportunities are spotted, right? And as much as I would love to stick to low market cap coins and accumulate them and pump them and then tweet about it and make a video and then make a fortune, nah, that's not really that much fun. I'm going to make sure that you guys also get in on it. And I think there's a major opportunity coming up very soon for Ethereum. But before we get started, please make sure you guys like, subscribe, share the material if it has helped you. And if you guys truly appreciate it as well, please take the time to upvote it just for a few seconds on Steemit. I want to get into some theory before we get started. I always get into theories, and that's important to understand. But before we do that, let's make sure we understand what Elliott wave refers to. So Elliott wave always has 5 impulse waves going up. This is called Elliott wave theory for the newer traders that are coming to my channel. And then after 5 impulse waves up, what we get is some sort of ABC correction. ABC correction can come in many different shapes and forms, such as A, B, C, D, E. It might come in, triangles. It might come in W, X, Ys. And people are very familiar with the terms of what they come in, maybe just not from the perspective of Elliott wave. For example, you guys might know it as a flag, right? You might know it as a symmetric triangle, a descending triangle, an ascending triangle, a falling wedge, a cup and handle, head and shoulders, just similar patterns like that, right? That's how a lot of people know these patterns by. But when you get to a little bit of a different level in trading, we classify these patterns away from patterns, first of all, and then we break it down into how Elliott waves can work into it, okay? Elliott wave is a way of deducing logically and rationally how these patterns are formed. And once you get to being able to properly label them, it actually changes up your game quite drastically. So I'm just going to talk about the basic Elliott waves first, where we have 5 waves going up like this, right? And then we have an ABC coming down like that. Now ABC likes to land where territory 1 and 4 is, because this previously acted as a resistance, which now is a support. And because this was a previously support before, it likes to be another support. So we kind of have a major contact point right there, right? So that's how it usually ends up. And then after we have an ABC going upwards, we break out into usually an impulse wave up. We would hope so. So we see another 5 waves going up like that. I always like to review these kind of lessons at the beginning of the videos, just for the newer people that are coming into the channel, because I think it's very important for us to get an idea of how these are formed as well. So just as an example, this would be here, roughly wave 1, all the way from the beginning of last year. Like all of this whole area is basically wave 2, right? Like this whole structure right here is wave 2, that's wave 3, that's wave 4, and all of this is wave 5 with a very extended 5th wave like that. So something like that in there. And then if we count within the subwaves as well, we can also count 5 waves always within impulse waves up. So that's 1, 2, 3, 4, 5. And once you guys get better at it, you guys will be very familiar. Do you guys hear that, or did I mute it? Okay, I muted it. It might pop up once in a while, but I'll be sure to close it very quickly as long as you guys don't hear it. I don't want to annoy you. And then after we get 5 waves going up, we get some sort of ABC structure like that, right? Something like that. And remember how I mentioned that wave, the C right here, likes to go, excuse me there, sorry, it likes to go to roughly the wave 4 territory. Sometimes it'll intersect with wave 1 as well, down over here, right? Not quite this time though. This time it was actually very bullish, okay? And for the people that are wondering what these lines of mine are in here, I decided to add it to TradingView. This is called the exponential moving average that I personally use, okay? Exponential moving average. I use 8 13, 21, 55. Some people will use, 100, 150, 200, depending on what type of investor and trader that you are. I personally use the 8, 13, 21, and 25 because they're Fibonacci numbers. Fibonacci numbers are part of the Fibonacci sequence. You guys might also know the Fibonacci retracement, Fibonacci extension, etc. And they're derived by taking the two previous numbers added up. For example, 8 and 13 equals 21. 13 and 21 will make 34, which are not on here. But if you take 21 and 34, that equals 55, right? So that's just how they're derived, in case you guys are wondering what all these numbers are over here. So we have an A, B, C correction just to get the people caught up with everything going on with Ethereum so far. Now we're going to zoom into a higher time frame. Excuse me there. I think I've been smoking a little bit too much. Yeah, I'm a smoker, guys. I'm sorry. I smoke maybe a pack every 2 weeks. So it's not really that bad, I guess. Maybe every 3 weeks sometimes, maybe a week. It all depends. But then again, there are some months where I'm like, I just don't feel like smoking, and I just don't smoke at all. So now what we're looking for, now that this was C, right? And C always has 5 waves coming down. And what we see is actually 5 beautiful waves. And I don't think we could have asked for a better type of retracement here. Now, this could be broken down as well to, for example, WXY, but I'm too lazy to count it with the WXY, so I'm keeping it very simple with 1, 2, 3, 4, 5, something like that coming down, okay? Every time we finish C, and always remember that C always has 5 waves, guys. It never has 4, and the C waves will always move impulsively going up. Impulsively means this: 5 waves going up for an uptrend, okay? And for a downtrend, impulsively means 5 waves coming down, okay? That is a beautiful impulse. So whenever you guys hear it, it can be interchangeably used between uptrend and downtrend. And then after we finish the C, we clearly have some major thing going on here, right? Some major thing going on like that, where that reached the bottom. And I want to show you guys something that's actually pretty funny. Okay, just give me a second right here. I want to show you guys my steemit right here. Check this out. So this was kind of like a general guideline of where I expected point C to finish. Right? It's around here, 280, 285, 286, whatever. Right? It was just a prediction, not this. The point was to be determined, but I was well hacked, so I couldn't really get you guys a prediction. But I figured it'd be around there somewhere, 280, right? I'd probably say around 290, and I want to show you guys where we actually ended up getting to. We ended up getting to about 288, right? Like literally right around there, which is pretty darn close. Okay, now how did I determine that point? Well, it was pretty simple, just by taking our Fibonacci, right? Right around these points right there. And also, we have to acknowledge, guys, key points as well that have acted as a support and resistance. Would you guys agree with me that this right here was a very, very relative point, right? So take a look, guys. Right here, we would call this a very relevant point because it didn't really breach it by much. It didn't really breach it by much. So what we would have done was taken basically this area right here, okay? This whole area as like a support zone. Just kind of around there between 382 Fibonacci and the 0.5 Fibonacci. Because we also look at this point right here. It's definitely lots of activity there. It's a very relevant point here, 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 even there as well, right? This would have been a very relevant point as well to make note of, definitely. It's right down there. Excuse me. So then, yeah, it landed right where I guess you can say I predicted it there. I didn't really finalize my prediction there, but we landed in a very bullish area between the 386 and the 0.5 region. Now, I'm not going to bother doing an Elliott wave count on here because it's honestly very difficult to do a count on this right now, okay? But if I had to count it right now, you know, it's I'm not going to get into it right now because I'm going to do a different type of analysis. For the first one that I'm going to do is a trendline analysis. I find trendline analysis very, excuse me again, very practical. So what is a trendline analysis? You're basically connecting very relevant points on the chart, for example there, and make sure you be very consistent with it, okay? If you're taking right at the tip at the top, make sure you're also taking right at the tip for all of these ones as well, okay? All of these ones as well, and make sure you zoom in very close to see, yes, that's relevant, that's good. Yes, that's also very good as well. Perfect, we're getting some good points. Next thing we're going to do is draw a relevant point from this bottom right here and try to connect as best as you can and try to get one across. Just like that, okay? Zoom in very close to see how relevant it is. Pretty good. Zoom in close, right? Touches it, touches it. You're basically taking the average as best as you possibly can as well, right? So I would say this is a pretty relevant point, but some might argue we should bring it up a little bit as well. But we're going to be consistent. If we drew it from the very absolute tip on the top over here, then we have to draw it consistently as well from the tip on the bottom here, right? Now, if I drew it like that, and now let's say I take another very relevant point, maybe, no, that's not a good one. How about from here? This one I might even just draw it from the wick, right by the 55 moving average, okay? Do you guys see what I'm talking about? The 55 moving average line right here? Because sometimes you have to make exceptions, and it's up to the trader because it's very subjective how we draw it, but sometimes I will change it, right? One might be arguing, oh, you're just drawing it to accommodate what you think might make sense. But the 55 EMA is a very relevant point to target and focus on. So if I drew it at the 55 EMA here, that's the yellow line, as you guys see, right? And then we also draw it here, we get some bull traps here, some bull traps as well. And now, if we draw it like here, what we're seeing is an apex, okay? Do you guys know what an apex is? Okay, I'm going to explain it for the people that don't know because it's important to cover terminology. An apex, first of all, triangles, okay? We got to go over triangles. I'm sure you guys know what kind of triangle that is. Definitely, you guys know. And what about this one right here? Right? You guys know what kind of triangle that one is as well. Right? What about this one? You guys know what that one is as well? Okay, great. If you guys know it, great. We're going to cover them very briefly anyways. How about this one? And how about this one? Those are basically the only triangles that exist in trading. Really, guys, just learn your triangles, okay? Learn your triangles, and they're so easy to play because they're trading is like literally the same thing over and over and over and over, okay? I'm going to explain to you guys the mechanics for each and every single one of these. This is called a descending triangle, okay? It usually likes to break down, but not always, when it reaches the bottom. And the logic behind it is that, or the psychology behind it is that it keeps getting a series of lower lows, right? See these lower lows, or sorry, lower highs right here? But it gets to this, it gets the same lows, right? So what it's saying is that it keeps pounding on the floor, right? It keeps pounding on the floor, but it can't get any higher. And then when it gets to near where it's squeezing into here, it drops down. This is what you call an apex. This moment, this area right in here, okay, these are called the apex. This is basically the breaking area where they converge and they meet. They meet at a very specific point, and then they want to break down or the other, or one way or the other, but they have a reputation and a higher probability of breaking the way that they're shaped. So this one would be considered a very bearish pattern right here, okay? Because you're getting a series of lower lows like that. Now look at this one, right? We're getting a series of lower, sorry, this one you got a series of lower highs, but this one you're getting a series of higher lows, right? Do you guys see what I mean? It keeps increasing and increasing and increasing, right? Actually, this one would be bad to draw it like that. It'd be more like, think of it like this, okay? Think of it like this one keeps pounding down lower, 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 and then eventually breaks down. But now think of this one, which is the opposite. This is called an ascending triangle, right? It keeps pounding at it, but boom, eventually it breaks upwards like that, right? But these ones, guys, are very hard to play, right? We're getting an equilibrium, where there's equal forces. For all the physics buffs out there, they're equal forces of pushing and pulling, right? You're getting it pushed upwards, you're getting it pushed downwards as well. But this one, so this one here, likely to break down, this one's likely to break up, but not always. This one, we don't know, guys. We don't know what happens. This is the hard one right here. This one, what people usually do is they wait for the breakout. They'll play it on the direction that it breaks, and it's always a decisive moment when it breaks, okay? So this one is the hard one to play, and I like playing that one because it tends to go the furthest in terms of distance. Now this one is also another one that I like a lot. This one is called the rising bearish wedge. Now, it keeps going up, guys. Don't mistake in this, okay? If you guys ever see the shape, it is not bullish. Okay, it's just going up and up and up and up and up, but it's squeezing into this wedge. And then what happens on the wedge is it just ends up falling down, right? Here, it's always going up and up and up and up. Nobody wants to sell. Now, if there's an equal amount of sellers rather than just buyers pushing it up, well, then, you know, there's only a demand for it to go up right now, right? But, you know, the supply eventually gets really low, and then people eventually just dump it at the top. But don't mistake this for always being bullish. What happens a lot of the times is that there's a throw over because they try to trap the newer traders, right? A lot of the whales with a bigger pocket, they'll buy it up right here. And then a lot of newer traders will also buy as well. And then what happens is the bigger whales will dump onto them. And then the people who bought it in this region right here, you guys are now stuck. Not you guys, but people are now stuck. Sorry if that came off rude. The people here are now stuck, right? But the market is actually being driven down instead. So the people who bought in this green box, who have been thrown over, is what they say. They're now trapped, okay? And the same concept applies to this one as well. This one is called a falling bullish wedge, okay? Now, we're not going to talk about the position that they're in because they come in very specific positions as well, which we'll get into another time during my pattern tutorials. You know, just as an example, this could be go 1, 2, and then 3, and then 4, and 5. But I'll just generally say that they're found usually in the C position of Elliott waves ABC, and they are also found in the 5th wave only. First wave, nah, it doesn't really happen in the first wave. In the A position sometimes, but it's really low probability. We're talking like 8% from what I can remember, okay? So this one here, it just keeps falling. People are just selling. Eventually the sellers run out, and then you guys know what happens afterwards, right? Boom, it goes upwards like that. But what a lot of times it happens as well is they throw it over down like that because they try to wash out the weak hands. Keep in mind that this game is all about trying to take each other's coins, right? All we're doing, guys, is literally trying to take each other's coins. That's all we care about. You know, it's the nature of the game, unfortunately. We want to, there's a very limited amount of liquidity, right? Liquidity is not unlimited, right? There's only a limited amount of supply out there, right? And because there's a limited amount of supply, well, the demand can be very high. So what a lot of bigger players do is they try to wash out the weak hands by making them dump, right? They're going to make them panic and say, oh, it's actually being thrown over. So they try to sell it to basically take their coins. And then after that happens, the market gets driven up like that. And the people that actually sold down here, they're just crying, unfortunately, right? And there's nothing that can be done about it because people just got their coins at a very, very cheap price. So there's a lot of strategy involved in these kind of things as well, if you guys have noticed, okay? Anyways, I just wanted to go over that very briefly with you guys to give you guys an overview of triangles. And, you know, sometimes my lesson could be summarized in My videos could be summarized in 2 minutes, guys, but I choose not to keep them that short because I want you guys to understand the theory behind every single play as well. Now, what do you guys see here? What kind of triangles within triangles do you see? Right? What you see, of course, is, generally speaking, we're going to call this a triangle, okay? One triangle there. And then generally speaking as well, they come in very specific positions. I want you guys to know that. But I'm going to keep it very simple for the purpose of these videos. Now, would you guys agree with me that we see a triangle within a triangle? Yes, definitely you agree with me, okay? Now, where do you guys see the next support points? Okay? I'm gonna zoom in to my 1 hour chart here. Okay, the next support points for the next swing low would probably be around, I'm guessing around this range right here, if I did take the average of it, right? Actually, let's see where the Fibonacci lines are right here. So probably about 818, I'd say, okay? There's one right here at 818. And if you guys notice, it's actually almost an equal distance up as it is down, right? So let's say that I, went up to where this region up there is. That could be like a 6% gain. And then now let's say I went down. That's also about a 6% gain. Interesting, right? 6% up, 6% down. I don't know about you guys, but just throwing out an odd number out there for the shorter term players. Well, if you're playing yourself a $30,000 position and you're making 6%, well, that could be a $1,800 profit for you guys in the next few days, either way. This is why I wanted to make this video, because there's absolutely a play coming up, because we are seeing this triangle, okay? We're no doubt seeing this triangle within a triangle form, and then we basically target a few different resistance and support points. And the first resistance point, of course, or support point is right here, right? The 382 Fibonacci level. And then the next support point is about right here as well, right? Or sorry, right here, around that region right up here that I drew earlier. So now, it's going to come down to waiting. It's going to come down to waiting and seeing where this breaks out. Now, of course, there's many things that people can do. Some people would like to enter a position now, and they're banking on it going one way, even before it has confirmed. And then, of course, there's the people that will wait for a breakout, right? They'll wait for a breakout to get some confirmation to see, hey, which way could this possibly go? And I'm one of those players. I don't like to enter before I confirm. But if we look at some of the indicators right now, let's get some up here, okay? Very neutral. If we look at the daily chart, guys, which I have to be very clear of right now, okay? If we look at the daily chart, there's still time, but what I don't like about the daily chart is this, guys, okay? It got rejected twice already at the 55 EMA. Look really, really close. Let's go to EMA analysis first, okay? One rejection right there, and this is the second rejection, and we're already 12 hours in the day. Think of it from this specific psychology. The bulls have attempted 2 days in a row now, actually 36 hours in a row, to push it up, right? See this long wick? The bulls have pushed it up, but the bears said no, they're not having it today, and they actually pushed them down below the 55 EMA. You have to think of it as a tug of war between the bulls and the bears always, where they're fighting. One side, the bulls, they want to drive up the price of the market because that's how they profit. They buy cheap and they sell high, right? Buy low, sell high. But the bears have a very different mentality. The bears, it doesn't simply mean when the market goes down, they sell so they can buy cheaper. It has a lot to do with leveraging as well and using margin positions where they profit by shorting a position. Shorting basically means they bet on the market going down, right? The bulls, the people who only go into long positions, they're betting on the market going up, and that's how they profit. Let's say you bought it at $1,000 and you sold it at $1,100. Well, you're profiting $100. But a bear mentality is very different. A bear says, okay, I'm going to short the market at $1,000. Okay, say one Ethereum for $1,000, just random number, and we're going to leave out all the other stuff like funding and margin aside, right? So they will basically borrow from the exchange one Ethereum at $1,000, and then the exchange says, well, you owe me back one Ethereum. So then a bear will think, okay, well, I want to buy back this Ethereum because I'm betting that the market will go down at a cheaper price, say at $9,000, and then I will give back the exchange who's asking for it their one Ethereum back, right? So at $900, so I'm shorting it at 1,000, I'm buying it back at $900, and I'm going to keep the $100 difference. That's what a bear thinks, okay? So it's always a raging war between these two. And that as much as we would like to have the market going up all the time, it doesn't happen because this war has been going on forever, guys. And it's really important to understand how people profit, right? And that's where that saying comes from, that the bulls and the bears always profit, but the pigs and sheep, they get slaughtered. So personally myself, I'm a bear at heart, but I play both bear and bull scenarios very well, and I make sure that I understand it well, because I understand that the money comes from playing both sides, right? But we can never just follow blindly, and we have to make sure we know how to stay in the game. So here, guys, the bulls have tried to push it up. Here, pushed it up, and the bears said, no, we'd rather profit by going down. So they pushed it down right here. And then that was yesterday. And today, 12 hours in so far again, the bulls said, okay, we're going to actually try again. We're going to try again to push it up. And the bulls said again, I'm going to try to push it up. But the bear said, no, we're not having it already. You have to think of the 55 moving average. See this yellow line of mine? You have to think of it as a support, right? Or as a resistance. And we see two clear things going on like that. And you have to think of it as tweezer tops, right? Think of tweezers. It's really actually like think of tweezers, right? And that's what it is, just kind of like that, right? Like just little tweezers, just kind of like that. And because of these long series of rejections right here, it's hard to believe that it may go up, but we still got a lot of time in the day, so we still have to wait to see what is going on, all right? I'm gonna pull up Ethereum very quickly right here. If you guys take a look at Ethereum right here, we are at about $2 billion for our 24-hour volume, right? Yesterday was about 2 billion, or day before 2 billion. Yesterday was about 2 billion again, and today is about the same. It's off by about $10 million. But the good news is that it's way more than it was the previous few days. But the 23rd, that was a big one, 2.3 billion, right? So we're not really that high in volume, so that definitely concerns me as well. There's a lot of things adding up to saying that the bulls are kind of losing right now, right? And then if we look at here as well, what we do see is that it can't really go above the 55 EMA on a high time frame, right? On a 12-hour, it's still below the 55 EMA. On a 6-hour, it tried to stay above it, but what it actually ended up getting in the past 6 hours, with only 1 hour to go, is actually a bearish engulfing candle. So that is actually of concern as well. Think of a bearish engulfing candle, something like this, okay? That is a candle, and just think of a massive red candle, guy, that's engulfing the previous candle, okay? It's just engulfing it entirely, like it's literally eating it up, you know? It's way bigger than it like that. Just that's the easiest way to think of it. And here, the bulls tried to make an attempt, engulfed it. Bulls tried to make an attempt, engulfed it. Not only did they engulf it, but it can't really stay above the 55 EMA, which is a very critical number. Here, it bounced off of the 8 EMA only, but that's barely a number worth considering, in my opinion, okay? On the 4-hour, it can't even stay above it as well. So that's giving me a lot of reason to not want to really go long on it right now. Okay, on the 4-hour, it definitely couldn't even break above it. Okay, like, or any time frames basically. The 3-hour just got rejected right here, right? Now, it tried to break above it, but this one could be, I suppose it could be, it could be an inverted hammer as well. That's starting to slowly show that it's gaining its positioning again for the bulls, right? Here on the 2 hour, it's being basically right in the middle, right? This is kind of a bearish candle or indecisive one as well. And if we keep going down, rejection, right? Like basically a rejection, or this might be seen as a tweezer, so it might be seen as bullish. There's a lot of mixed signals. Here we're seriously below it as well, the 55 EMA. On the 30-minute chart, we're well below it as well. On the 15-minute chart, well below it as well, okay? So something is going to happen, guys. Something is going to happen here, and I'm very interested in seeing what is going to happen, because I'm ready to play a position whether it goes up or down. Now, I don't know if it's going to go up. I don't know if it's going to go down. But my take is this, that I want to play for a very short day trading position. And guys, every time I'm always going to use really round numbers, okay? It's not the position size I'm going to play. You know, and people have warned me to be cautious about talking about my position sizes, just because you guys know why, right? We should never talk about things like our exact position size, which might give away our balance, right? So make sure you guys are exercising a lot of caution, right? Don't ever talk about your balance. Don't ever brag, guys. Don't ever, you know, make it public in any way. And if you guys ever catch me saying something really stupid or showing something really stupid, make sure you guys let me know right away as well, because that's the last thing that I want, which is to reveal myself. So I'm counting on you guys as well, right? So I'm going to wait for a breakout, guys. If it breaks out of this right here, I personally believe it might even target down here again, okay? It might actually target all the way back down to the 382 Fibonacci level, right? Which makes a really good risk to reward ratio actually of 4.84. Look, this is a really good risk to reward ratio, right? 4.84 right here to 1. Possible gain of about 5%, we'll say. So let's say you guys played yourself a $10,000 position and you're making 5%. Well, 5% is actually pretty big. That's a $500 profit, and that could be made in literally 1 day maybe, right? So it's a pretty decent position to take. And then the other position that I'm going to take when I wait for it to break out is simple. I'm just going to, if it goes upwards, right, out of this, make sure you guys are also drawing it in, because I'm not going to put in specific numbers, right? But I'm more so leaning towards down for now, okay? And here's another 5, like, you know, not even 5, maybe 4% for this guy, just depending on where it is, right? 4 or 5% as well. You would put your stop loss slightly below the trend line resistance there. This one you got a chance to gain 4 or 5% as well. So this is the play that I want to talk about that's upcoming, guys. It's coming very soon, you know, it's coming very soon. The triangle is squeezing hard that I've mentioned already here, and this could target all the way down to about, you know, we'll say about 820, right? Somewhere between 820 and 830 if it does fall down. And then if it breaks upwards, if it breaks upwards, we could be clearly looking at, you know, anywhere between 920 to 930. So either way, it works. It's almost a win-win situation in my opinion for both the bulls and the bears, right? So right now we're at 960. This one might actually be a better scenario for if it goes up, because it's more so in the lower region of the triangle. So once again, it could fall anywhere between 820 to 830 if it does break down. If it goes up, we could be looking at anywhere about we'll say 910 to 920 as well. So there's a really good short-term play coming up, and I just want to summarize that for you guys. So yeah, I'm still very bullish on Ethereum long-term, guys, and I still stand by my prediction of, you know, $2,800 plus there, as you guys have seen before, I'm sure. But right now, I'm more so focusing on short day trading positions and some swing as well, with the main goal of educating in mind. So all my videos, despite how people might want to say, oh, get to the point. I don't care, guys. If you guys want me to get to the point, these videos are meant to be very educational, and one day you guys are not even going to be watching my videos, because you guys will be all doing your own technical analysis. And I really hope that you guys get to that point one day and make a lot of videos and create a lot of charts, because, well, what if I created an army of analysts, guys? Think about it. What if I created an army of analysts, and you guys all became a part of the army. I don't have to do anything anymore in terms of trading. Or training rather. I can just trade. I can simply just focus on following your charts, and we're going to become a very self-sufficient ecosystem where I don't have to do this anymore. So hopefully we get there one day in a few years together, guys. So regardless of which situation or which position you take here, long or short, time will tell very soon, guys, which way we're going to break, and I'm very excited to see where it goes, because at the end of the day, 5% profit is 5% profit for a day trader, and that's pretty decent money to me with very, very low risk. Anytime we see a risk to reward ratio of 4 to 1 or greater than that, it's definitely a good opportunity to look for. As a trader, we should always look for high probability setups with that offer very low risk and high reward. And I think that this is definitely going to be one of those setups that are coming up very soon. So make sure you guys are drawing your triangles very accordingly on here. Make sure you guys try to mimic what I'm doing as well. Make sure we understand the triangles and how they behave. Excuse me, how they behave. And you know, triangles such as symmetric triangles, falling wedges, rising wedges, ascending triangles, descending triangles as well. And you guys are going to be on your way to becoming a much better trader. So other than that, guys, I hope you have enjoyed this video of mine. I am so happy to be back and to be talking to you guys and to be producing videos again and to help out the community. And I make sure you guys upvote this on Steemit if you truly appreciate the material I'm putting out. And definitely make sure you guys like, subscribe, and share. And retweet the material as well. Have yourselves a great night, and I'll see you guys for my next video. Bye now.